Trade jitters drove down U.S. stocks on Thursday, with the Dow dropping 1%, the S&P 500 shedding nearly 1.8%, and the Nasdaq spiraling 2.6%, officially closing in correction territory. President Trump on Thursday delayed tariffs on most Mexican and Canadian imports for 1 month, the latest twist in his on-again, off-again approach to trade policy that has whipsawed markets. But Brian Mulberry, client portfolio manager at Zacks Investment Management, sees the pullback as something that may eventually bring more clarity for investors.
So the noise is simply, this could get ugly, and it's a little bit of a sloppy trade right now, and we think a lot of people are just simply taking some risk off of the table, which isn't necessarily a bad thing when we see the S&P trading at 22 times forward earnings versus the historical 17 to 18 times. So for us, it wouldn't be irrational to kind of get to that 5,400, 5,500 level on the S&P and then find somewhat of a bottom there, because then the valuation would at least be closer to that historical average. And then we have some time to assess where the real risk is in this market.
Thursday's stock moves included Marvell Technology, which slumped nearly 20% after the chipmaker's results failed to impress investors. Shares of other semiconductor makers, including Broadcom and NVIDIA, also saw big losses. Shares of Tesla fell 5.6% as brokerage Baird named the electric car maker a bearish fresh pick. And shares of Gap, which ended lower, soared about 14% in extended trading after the retail chain beat fourth-quarter sales and profit estimates, helped by improving demand at its Old Navy and Banana Republic stores. Investors now turn their attention to Friday's key monthly jobs report for more clues on the direction of interest rates and health of the economy.